monetary policy decision at the Reserve Bank of South Africa. Later on this afternoon, 3 p.m. SA time, 2 p.m. here in Nigeria. The monetary policy will be making its decision. Leseta Hanyego will be speaking live to journalists and about basically the public about the decision for monetary policy and the direction. So lots to talk about. Also the Naira as well. We saw an appreciation yesterday. Who better than Ibukun Omoyeni, who of course is Sub-Saharan African economist with Vetiva Capital Management. Ibukun, thank you so much for joining us. Good morning to you. Good to see you again. There's some issues I want you to talk through and this is why I guess the ruling ANC party is projected to lose its share of the votes this year. The economic issues facing South Africans as they vote. How do you see, these issues? How big are they facing the South African economy?
It's quite ironical that barely 1 year after the inauguration of the current administration in Nigeria, we are seeing elections in South Africa. So basically, South Africa is one nation that has been ruled by the ANC since 1994. Mandela, Mbeki, Zuma, right? In recent times, of course, the polls are saying that this party might probably lose a majority, right? Unlike Nigeria, South Africa runs a parliamentary system where you vote in seats into the parliament, you vote in individuals into the parliament, and from there they select the leader, right? And you need to get at least 50% of the seat in order to select the leader. And even from the results that are coming in, even in South Africa, we are saying that ANC is getting around 42% of the votes, which is lower than what it did in the last election. It did about 57.5 thereabout in the last elections. And there are a lot of postulations around what will happen, right? The first scenario is ANC wins by a slim majority of about 51%, and that way you can still be sure that there will be some policy direction or policy continuity, right? But in the case whereby they lose majority, it's still going to be them probably forming a coalition party with a much smaller party. And you also, you know that this year's dynamics has changed a bit because you have Jacob Zuma with the MK party. So we think that's a lot of things to uncover there. But we think South Africa as a whole has faced similar challenges with Nigeria, right? The port system, the power system has years of underinvestment, and that has led to power outages. We are seeing load shedding. The energy availability factor is below what it's meant to be, and as a result, that has led to manufacturing downtime in South Africa. South Africa depends a lot on manufacturing, and it needs a strong power system. But the load shedding, which is more or less scheduled times of downtimes, it has improved in recent time, which is not surprising because, of course, the election time, it has to improve. But we think the legacy issues will still persist. Unemployment is quite high at about 34%. Although inflation, on the other hand, has been declining recently due to, of course, reduced global prices, global food prices. The geopolitical premium on oil prices is around $0. And what we are seeing is that if the demand-supply imbalance, if there's a shifting towards increased oil supply, you could see oil prices fall over the couple of months to come. But when you look at the balance of things, right, inflation is falling. Even though the rand, I'm talking about our currency, right, the rand has held around 18 thereabouts, even despite the election uncertainty. But we think by the time the Fed pivots and we see rate cut and improved foreign inflows, we think that the rand would recover beyond that level.
Yeah. There's been a lot of talk about, because we look at some of the issues there, youth unemployment there is about 45%. And it's been said that, younger South Africans they don't have much of a connection with what happened when Mandela and Mbeki took over, the whole apartheid thing. So it's a possibility that's where ANC could lose a lot of support. But, it's the same thing we hear, although here we rejigged our unemployment numbers to where it's 5% or whatever. But can you talk about the issue with youth unemployment, though, in South Africa? How big of a problem that is?
So youth unemployment, really, when you look at African countries, especially the emerging ones, there's a huge problem around unemployment, right? And one of the reasons for this is because years of underinvestment. When you don't invest in key sectors like your power sector, your manufacturing sector, those are the sectors that bring the jobs, right? Your services sector can bring jobs, but it's just a little. If you look at the most performing sector in South Africa, is the finance sector, business sector, right? So they need to really focus on manufacturing, and it works with all these things around power, around rail, right? They have to fix the issues around this key infrastructure so that they can power the manufacturing sector. And I think that's one challenge that Nigeria also has. If you look at the election system in South Africa, it's not what we had in Nigeria. Right? We had a lot of youth that decided to vote last year, right? It's a very similar pattern, but you can't just displace the majority in just one go, right? That's what is going on right now. And I think ANC will still maintain its majority. And if at all anything happens, we could probably see coalition with a much smaller party, but it's still going to maintain its dominance.
Yeah.
And of course, if it's going to form a coalition party, we're going to see some bottlenecks around policy implementation. But we think that overall, ANC still has that hold over South Africa.
You make a very good point, and I do want you to emphasize this point for our viewers. Policy continuity and the majority staying in power. That's the markets, or rather maybe investors would like that, because the policies that were in place before, possibly. So can you speak to that policy continuity if for the majority to stay in power?
To stay in power. So ideally, when you have a new government, right, it could lead to new investigations, and you know that some of these problems, even though they are long-standing, they cannot be fixed at a go.
Right.
We were here in 2015 when there was a whole row about how Nigeria will be a lot better. Meanwhile, 2014 there was a commodity price crash. Right. Whoever became president in 2015 would have to handle that shock. So that shock that happened in 2016 is a spillover of a 2014 commodity price crash. So the challenges, the fact that you have a new phase doesn't mean that those challenges will go, right? And so you actually ensure that whether it's a new party or it's the existing party or an old party, you have to ensure that there's policy direction. You have to build up your macroeconomic model and ensure the policy that you're going to put forth are going to achieve certain development objectives. So we think that is what South Africa needs to do after this process. We get the results on Sunday, possibly.
I think it is fascinating. Well, I mean, the dates were already set in advance. The MPC calendar is released, so it just so happens that it's a coincidence that the MPC decision is a day after the election. What do you think we're going to see from Mr. Kanyego later this afternoon? So
in South Africa, the interest rate is around 8.25%, while we are seeing the inflation at 5%. We think there's a positive real rate of return. And we think that the governor will probably hold today, right? We don't see room for rate cuts yet or rate hikes. Reason because of the recent elections. Why? That's one. Two, inflation is is declining, is moderating. And we think that it has to moderate towards the target of 4.5% before we can see any rate cuts. And I think that the South African Reserve Bank will likely follow the US Fed. So once the US Fed begins to cut rates, that's when we need to see rate cuts in Africa. So we think for now it's going to be a hold. Yeah, great stuff. Okay, we've talked about Nigeria quite a bit. The Naira, we did see an appreciation at the Autonomous Foreign Exchange Market, NAFEX, or NAFEM. So I think about 1,392 or so. How have you, I mean, it looks, we've just seen quite a bit of volatility. I mean, all the way to 1,008, coming down to 1,001. Climbing back up to 1.5. Now it's at 1,329. How have you seen the movement of the US Naira USD exchange dynamics? Of course, the foreign exchange market in Nigeria has been quite challenging in recent times, and that's because the CBN has decided to step up its policy tools. As at last year, we were actually screaming, we analysts, that interest rates need to go up, and not just the MPR, but NTB, OMO, right? Because those rates are the actual rates that determine whether FPI is going to come in or not. Last year, around 7%. Very close to what the US one-year Treasury was doing. Now you have about 18%. And what that means is that even in theory, economic theory, right, the central bank is allowed to influence the exchange rate in the short term. So that's why we are seeing appreciations, right? It can either intervene by raising the OMO rates, the open market operations rate, or the NTB rate. And we have seen that the yields on NTB rate are above 25%. Yeah. And what that implies is that investors would do what they call calculate the carry trade. If I can borrow from the US and, of course, come into Nigeria and invest at that rate, how can I get out and make a return? So that's exactly what happened in Q1. We saw $3 billion coming to Nigeria from foreign portfolio investors, which is the highest we've seen since years, right? Since a lot of years. So it's so massive that it exceeded the total FPI inflows for the whole of last year. And what that meant was that Naira appreciated significantly, closing at 1-50. Now, we've seen recent upticks, right, due to the fact that, if you observed, it was the very week that the CBN said it was not defending the Naira, that we begin to see a decline in the value of the Naira. And coincidentally, that was the period where we saw reserves begin to increase. Right? Reserves have increased by about $600 million between that last week of April and now. And currently we are expecting two things. We are expecting $1 billion inflow from Afrexim Bank. We're expecting $2 billion from the World Bank. That's $3 billion, right? And that's why we think that once $2 billion from the World Bank, by the time it enters our reserve, by the time we begin to see reserve accretion as a result of that inflow, we might begin to see more currency appreciation, right? Of course, in the near term, we expect that the recent appreciation we saw might fade a bit, but by the time we're going to have those increased inflows, we'll still see the Naira around 1.3 to 1.5 levels. It will move around that level. We think that's good because at least there's a sense of stability around the currency, but we think the CBN is really doing a great job because it's not easy, right? Looking at the long-term driver of the currency, that is the short-term driver. We're looking at oil production, we're looking at oil refining. Now, Dangote refinery is coming online. Some other refineries are coming online. These refineries have the capacity to make the Naira appreciate in tremendous proportions, right? And this is more of a future medium-term outlook, right? We are looking at the period whereby Nigeria will become a net exporter of oil. And that's why we think coming in, looking at Nigeria now, it might not be here for long, right? It might not stay at 1 for long. We think that over the medium term, by the time we start producing 650,000 barrels per refining, 650,000 barrels per day, we think that Naira would appreciate significantly because a lot of African countries would want to demand for our oil. Yeah. And it's very possible that they might ask to pay in Naira, and that will increase the value of the Naira. So we think there's a strong bullish case for the Naira over the medium term, given the refineries that are coming on board, right? Of course, we have challenges with local oil production supporting the refinery. And the refinery cannot just run based on vibes, right? It has to have that improved. And now you can see that the refinery is depending on U.S. shale oil, that's what we have seen in the news. We think that that development might actually mean that even though we refine oil domestically, we will not expect it to sell at so much a discount, right? Because given this factor of importing the oil from the US rather than from Nigeria, that would actually add to the cost of refining. But we think that it's going to create a very strong bullish case for the Naira. And Naira might trade below 1,000 Naira over the medium term. I'm saying within the next 2 to 3 years, right? If that policy cost stays the plea. But we think that in the short term, I'm going to see a lot of volatility. But the CBN, we have a lot of confidence in the CBN to intervene and ensure that the rates does not go haywire, as I've seen in recent times.
Ibukun, always a pleasure having you on the show to talk about the regional stuff happening on the African continent and also matters in Nigeria here. Ibukun Omoyeni, Sub-Saharan African economist with Vetiva Capital Management. Thank you so much for joining us. Really appreciate it.